Mahesh, stay with us. Let's also get Puneet back in to tell us about what Emkay is making of Dixon Technologies, which is also up in trade. Puneet, over to you.
Well, they've initiated coverage on Dixon Technologies with a target price of 20,000 rupees per share. That's almost a 22% upside from the current levels. And it's come at a very interesting time because all EMS stocks have seen a correction, and so has Dixon. The past months is down almost 10%. So a very interesting time the brokerage note has come in. They mentioned that the company has successfully gained leadership across verticals, as well as getting into adjacencies. Like, for example, if they've got into home appliances, they've now entered consumer electronics as well. So it has done that very well over the last decade. They also see that from the medium to long-term perspectives, there are multiple growth levers to watch out for. They've said that further domination of the rising smartphone market is something that they are baking on, and that's almost 80% of the current revenues already for FY24. And they're seeing that a 70 to 75% incremental share for Dixon Technologies will take the overall share of mobiles manufacturing in India to 44% for something like a Dixon Tech versus 25% now. So there's still a lot of growth momentum in the mobile segment. They've also said that IT hardware and components is the other growth lever, which is backed by strong PLIs, and that's something that the company is betting on, as they already are, factoring in laptop manufacturing as another segment. They have already tied up with the top 4 manufacturers in laptops, the likes of HP as well as Asus being other ones. Finally, they are mentioning that IT hardware can form roughly about 23% of the revenues going forward versus just 0.5% now. So another growth lever going forward. They're building in a 20 as well as 40% CAGR in terms of revenue as well as earnings per share, and are bullish on something like a Dixon Tech despite the recent correction going forward as well.
Okay, Puneet, thanks so much for that. Mahesh, back to you on what you're making of Dixon Technologies. Well, I reckon that at least some would say that even at 16,800, 17,000, Dixon Technologies is still expensive. But on the other hand, there's also expecting a 35% growth CAGR over the next 3 years. So how are you standing here?
No, definitely Dixon is a good pay. In this sector already, all the stocks are facing some profit booking. So I think Dixon could be also face some profit booking from these level also. So 14,500 for 15,000 could be a good level for buying. From a longer term prospect, we are also optimistic for the growth. But in slowdown in economy, then Dixon can also face some margin trigger. So margin fall so 14,500 to 15,000 could be a good level if dip come from 1 year horizon. We think 19,500 level could easily come in Dixon, but one quarter slowdown we can see some profit booking also. So that will be keep in mind.